My name is Adam Smith. I'm a co-founder and the VP of Business Development for Oroco Resource Corp. We are based in Vancouver, Canada. We're listed on the Toronto Stock Exchange. We have at present a market cap of about 100 million Canadian dollars. I reference that now because I will bring it up later on to try to point out the opportunity that Oroco represents to investors right now. We're a junior mining company. We have a large land package in northwest Mexico. We are developing a large copper asset there. We have raised and deployed at the property approximately $50 million US over the last 4 years, and developed during that time a very large asset which has been demonstrated through a National Instrument 43101, the Canadian Mineral Reporting Standards Mineral Resource Estimate. And further to that, we have completed a preliminary economic assessment on Santo, Tomas, also compliant under Rule NI 43101. I'd love to read this with you, but not today. Sufficient to say there will be some forward-looking statements today. So, Santo Tomas, large land package, 160 kilometers from a deep water port in northwest Mexico. The land package is about 35 square kilometers. Prior to our ownership of the property, Santo Tomas had been drilled in detail up to 1994. A billion-ton, multi-billion pound copper resource was defined. The price of copper, pretty much from the day that that resource was published and the economic assessment that went along with it was published, copper declined from 1994 to 2001. In 2001, it hit record low prices in terms of real dollars. Capital in the mining exploration business dried up. Gold was called a relic, and the ownership of the property reverted to the Mexican national, who had optioned it to a Canadian exploration company. Ruben Rodriguez then started to speak to us about the property towards 2006, 2007. He admitted to having done a very bad business deal. He optioned this to a mineral exploration company, or a group of people purporting to be a mineral exploration company. And he got into a little bit of legal difficulty with these guys. We got involved in 2009 for the purpose of exercising Ruben's contractual rights under the agreement that he had exercised with these individuals. In 2015, we won a court case in the Bahamas. Ownership reverted to Ruben Rodriguez. Another 5 years of legal wrangling and property legal title assembly in Mexico. And starting in 2001, clean legal title, clean mineral title, registered by the Mexican Public Bureau of Mines, we commenced exploration at Santo Tomas. We conducted 14 square kilometers of 3D-induced polarization, very high-tech, big charge of electricity into the ground, tried and true technology in the oil and gas sector, relatively new in the mineral exploration sector. That 3D IP program showed the mineralization as defined by the prior drilling to be exactly where it should be, and to also cover a much larger footprint than had previously been drilled. We then commenced drilling at Santo Tomas, 76 drill holes, 49,000 meters of drilling. We covered about 5 kilometers of strike length of a geological structure, which runs up to 12 kilometers on our property. Every single one of those drill holes hit mineralization. We had historical drilling, and we had the 3D IP program to guide us. Concurrent with the drill program, we commenced baseline environmental studies. We were putting together a water strategy, tailing storage, permitting, et cetera, as well as developing relationships with the local community. Mines don't get built where you don't have social license to build them, and I'm very happy to say that the community surrounding Santo Tomas is very supportive of this project. In May of last year, we announced the first modern compliant under NI 43101 mineral resource at Santo Tomas. 1.1 billion tons of ore containing 8.8 billion pounds of copper, or 4 million tons of contained copper metal. Copper has been a little bit volatile in price recently, but approximately $10,000 a ton times 4 million tons of contained copper, that's $40 billion of contained metal at Santo Tomas. So a very, very big mineral resource at this project. In October of last year, we published an economic assessment, a preliminary economic assessment estimating the capital cost of a mine at Santo Tomas, estimating revenues, providing things like estimates of annual production, CapEx, estimates of annual production, life of mine, recovery rates, cost of production, and spitting out some valuable metrics for the financial community, for the investment community, such as net present value, internal rate of return, that sort of thing. So a very, very successful program. That was a phase 1 at Santo Tomas. It was never meant to be exhaustive of the mineral resource at Santo Tomas, but simply to meet a level at which we felt comfortable putting a mine plan together. So there is a phase 2 coming. There's plenty of opportunities for continued expansion of this already very large resource. The results of that PEA, I could talk about geology, I could talk about porphyritic alteration and alteration halos and hydrothermal fluids and all that. But really, ultimately, this is an economic asset. The mining company that buys this from us is looking to make money. So suffice it to say that that report, that's the cover shot or the thumbnail of the cover on the right-hand side. If you're interested in geology and engineering, there's 350 pages of it. Have that, and it's a really, really good report, I should say. Very proud of the people that put it together. But from my perspective, and perhaps from your perspective as well, the more important conclusions of this report are the economic conclusions. What does this mean to Oroco's potential from an investor's perspective? The PEA firmly demonstrates the economic viability of Santo Tomas. It benefits from the excellent infrastructure, the simple metallurgy, cohesive and consistent grade distribution, and a low strip ratio. So it's a big mine, or it's a big project, and it's also one that benefits from a number of things like the fact that the ore outcrops on surface, that 70% of the ore body exists in a ridge that rises up from the valley floor, and therefore you get things like gravity, for instance, benefiting the mining process. You're dropping ore instead of lifting ore out of a hole in the ground. We are surrounded by infrastructure. We're in a region called La Entrada al Pacifico, the Pacific Gateway, a multimodal transport infrastructure corridor developed jointly by the U.S. government and the Mexican government to support industries just like this. That infrastructure that's available in La Entrada al Pacifico benefits us greatly, certainly when compared to our peers, some of which, these big undeveloped porphyry copper deposits, may sit up 4,500 meters in the Andes. Perhaps they're several hundred kilometers from tidewater in northern British Columbia. So having a project like this in a region so close to a port, so close to infrastructure, is a tremendous benefit. And those numbers are reflected in the PEA. A low CapEx, high internal rate of return, high NPV, the large size of the project, 107,000 tons on average per annum. At today's copper prices, that would be approximately $1,070,000,000 in annual sales, in annual revenue at Santo Tomas. We are, from the moment we published this preliminary economic assessment, we recognized that there were a number of decisions taken in the creation of that report that could be improved upon. So we embarked on an optimization of that PEA. We call it PEA 2. That is due anytime in the next several weeks. And I refer to some of the goals of that PEA 2 in a subsequent slide. So here's a block model. Each one of these blocks represents a rectangle of mineralization at Santo Tomas. The different colors indicate the different grades. And an advantage of this project that I referred to earlier is the ridge. The compliant mineral resource exists along a 3.5 kilometer ridge. 70% of the mineralization lies above the bottom of that ridge, and thus you have the potential for cost savings due to dropping ore as opposed to lifting 1 billion or 1.5 billion tons at the end of the day up out of the pit. Huge energy savings as a consequence of that. The region, another one of the project's strengths. The project is the red shape in the upper right there. The purple line, the green line, the dashed line all represent railway power lines. A gas pipeline that comes from Texas runs to within 20 kilometers of the property, built by TransCanada Pipeline to take natural gas to the port of Topolobampo. So we have within 10 to 20 kilometers of the project a rail siding high-pressure gas pipeline that could provide energy for the project in the future, a highway, all of those elements that lend themselves to the low-cost development of a big open pit mine such as Santo Tomas will one day be. Huge capex, huge opex savings as a consequence of this cost savings. Just to put this in perspective, this is the Sea of Cortez. This is the Baja Peninsula. The resort city of Cabo San Lucas will be down here, and about 500 kilometers north of the top of the screen would be the Sonora, California border, or the Sonora, Arizona border. So the far northwest of Mexico, a very, very strong region for mining, gold, silver, copper, ArcelorMittal are within, between us and the town of Choix, mining iron ore. So it's a strong region for mining. It's a historical region for mining. Mining is accepted by the community, and it's a big part of the economy of Sinaloa State, Sonora State, and the neighboring Chihuahua State. I should also point out the Huitas hydroelectric dam is about 15 kilometers to the west of us. So again, another source of low-cost green energy, green decarbonized mining assets are going to be one of the prizes going forward. Big mining companies, of course, are very conscious of ESG. They're very conscious of lowering their carbon footprint. And so we have the gas pipeline, we have the hydroelectric facility, and this sits within a region of some of the highest solar electrical generating potential in the world. The community is another one of our strengths. We've been working with the community for years, even before we started exploration at Santo Tomas. And we've met all the way up to the state governor. The Minister of the Economy is in one of those photos there. He's very supportive of the project and has pledged to help us ultimately get permits for this project. This would be among the biggest taxpayers in the region and in the state. In a rural region, 100 kilometers from the town of Los Mochis, which is the regional financial capital or business capital. This is a region that primarily gets by on ranching and mining, but this would be, when it's built, will be by far the largest mining activity in the region. So it's an activity, it's a hope that the region has that this mine gets built. It will lift the entire state and certainly lift the region. From the time we resolved the legal title dispute and commenced raising money at Santo Tomas and commenced exploration, we've had a steady climb from doing the initial confirmation of the historical mineralization, the drill program, the mineral resource estimate, the PEA last year, the optimization of that PEA, and then onwards into a phase 2 drill program to do, among other things, fill in this gap here where historical mineralization identified by these historical drill holes showed the potential. We did not drill in that region. We will in phase 2, and it's fairly straightforward that we're going to achieve an increase in the resource size as a consequence of that drill program. And then in particular here in the south zone where mineralization is open and the potential to expand, the likelihood to expand exists there. So you can't really talk about a big copper project right now without talking about the very historical nature of where we are in terms of copper consumption as a society. Copper is the third most traded metal on the planet, iron ore, gold, and then copper. The annual consumption of copper worldwide is about 25 million tons, which is $250 billion worth of copper annually, so it's a big, big market. It is also very central to decarbonization, to renewable energy, to the lifting of large numbers of people from lower income levels to upper income levels. Your life becomes more copper intensive as you get richer. China being a great example of that. India and the expectations over the next generation for large numbers, hundreds of millions of people in India to be lifted from low levels of income up to the middle class, and levels where we just start to use a lot more copper as a species. So not only is copper the new oil, as Goldman Sachs calls it, I guess I don't have it on this slide, but Goldman Sachs termed copper the new oil because of its indispensable role going forward as a commodity. But we're having issues providing and seeing how we're going to provide all of the copper. So we've got great increases in demand, dramatic drops in the rate of discovery of new copper resources, and a very sticky supply situation that I'll explain later. A lot of that is coming to a head right now. Copper recently hit record prices. There's been a great deal of volatility in copper, but it recently hit record prices just a month ago. And the copper thesis, the understanding of the increased demand and the sticky supply, is starting to become understood by investors. So we'll talk a little bit. I've got a few slides here to sort of explain how I see, how our company sees the big picture with copper, and how owners of assets like Santo, Tomas, how investors in companies like Oroco are going to benefit. Big mines, big money. That's a saying in the mining industry. There's small mines and there's big mines. If you've got $40 billion worth of copper in the ground, that's the equivalent of 16 or 17 million ounces of gold. That's a big mine. And the numbers start to become quite impressive. You know, $1 billion in annual revenue, greater than 2-decade mine life, 40 billion of contained metal in the ground. Those are big numbers. This is a big mine. This will ultimately produce a lot of copper and generate a lot of revenue for its owner. It's a porphyry copper deposit. Porphyry meaning low-grade, disseminated mineralization. Most of the world's copper comes from porphyry deposits. They can produce at large scale. You can process hundreds of thousands of tons of copper per day. You can generate multi-billion dollars of revenue per year. North of us is one of the top 5 largest copper mines in the world, the Cananea deposit. This year it will do about $4.5 billion in sales, and it's been producing copper for a century. So these porphyry copper deposits are the prizes for big mining companies. Multi-decade life, low cost, et cetera, et cetera. Rising copper demand, challenges to new supply, falling rate of discovery and historically low pipeline of new copper projects identified in this groundbreaking study from 2018, in which the London office of RFC Ambrian declared the cupboard is nearly bare. The world's big copper mines are rapidly depleting. The rate of discovery has fallen off a cliff since the early 1990s. And mining companies have been reluctant to invest in new growth for some reasons that I'll go into in the next slide. Well, sorry, before I go into that, the major mining companies, recognizing this coming trend of increased copper consumption, have been engaged in high levels of mergers and acquisitions. BHP recently tried to acquire Anglo American. That was rebuffed, but the narrative or the discussion that came with that attempted takeover was that the big mining companies are trying to add to their copper production, but they're doing so through M&A of existing peer companies and existing copper mines. The world needs approximately 80 new mines to meet future demand. Merging ownership, consolidating ownership is not adding to that. Big mining companies are said to be stingy right now. They've spent the last 15 years deleveraging their balance sheets, making up for past sins. They've been very conservative in their capital allocation. So you've got a situation where we know we need more copper. The rate of discovery has declined dramatically. The majors are not spending what they need to. They're getting more copper production, but they're doing so by acquiring their peers or attempting to acquire their peers. Which leads companies like us, with a record low pipeline of future projects for production, the knowledge that this is going to turn around and major mining companies are going to have to start to spend the capital to develop new projects, greenfield projects like us, and a scarcity of assets like ours. So this was an article in one of Canada's national papers. And why do those companies, very kind of esoteric subject for a national newspaper, but why do copper miners, why do companies like ours, why can we say no to takeovers? Well, scarcity. We're in scarcity and rising copper prices. This you can read more of in our PEA. Just shows that we're very sensitive to copper prices. There's tremendous leverage. Copper prices, we used a reference copper price of $3.85 in the PEA. At $4.50, where copper approximately is today, that's a 15% increase in, or rather, sorry, a 20% increase in copper price yields a doubling of the net present value at Santo Tomas. So tremendously leveraged to copper prices. Where do we stand in the world of our peers? This is decreased capital intensity, i.e. a lower cost per unit, lower capex per unit of annual production. And you can see the lower the position, the better here. We are among the lowest cost per unit of annual production of the peer group. NPV over capex is just a measure of the risk of the project. We are again up here among the top of the group. The PEA2 has a target of increasing that and moving that level over there. So we are going to realize some significant improvements through the PEA2. And you can see here's the average capital intensity. Here's the average life of mine. The PEA2 will move us up into this top sector here. Mexico as a jurisdiction, Mexico's had some issues recently, but thankfully the president, Luis Obrador, AMLO, will end his term in a month. He's been the only anti-mining president in Mexico in the last 40 years. This is an old slide. I don't think anyone would place Mexico in the top 5 in the last 6 years during AMLO's presidency, but it is expected that now under a new president, Mexico will try to regain its place among the world's mining elite. It's the world's biggest producer of silver, after all. Number 5 of lead, and 6 of zinc, 8 gold, 9 of copper. It's a mining powerhouse. It's got infrastructure, it's got geological endowment, it's got the people, and it's got a history and a mindset of supporting mining. State of Sinaloa, big recipient of foreign direct investment. There you go. So to sum up, because I see I'm running down here. Preliminary economic assessment gave us a multi-billion-dollar NPV. That is going to likely improve with the PEA2. These projects tend to get bought based on a percentage of PEA of the NPV value. Somewhere between 40 and 60% is the historical average or historical range rather for acquisitions. 40% of a $1 billion NPV, or 60% of a $1 billion NPV, several $100 million. In the beginning of the presentation, I referenced our market cap of $100 million. So there are definitely opportunities for investors there. The enhancements, I've talked about that. Strong infrastructure. Update this, we just closed on $6 million additional dollars 2 weeks ago, and will be the beneficiary of these converging trends in the copper market. Ultimately, hopefully then, the beneficiary of the mindset of the majors as they start to deploy the capital and look for more copper resources. There's research. When you get this, my email will be on the presentation deck. Please do be in touch if you're interested in the research, which gives us a near-term $1.60 share price versus 40 cents approximately today, and long-term, ultimately through an acquisition by a major of $4 per share. So definitely some upside recognized by Cantor Fitzgerald.